Hello, everyone, and welcome to this afternoon webinar. Today, we will talk about the Bollinger Bands and how can we implement them as a strategy themselves, or how can we use them within our trading or using a strength filter. So let's get started. Just to make sure and to make it clear, actually, that this content is for general information only and it's not intended to provide trading or investment advice or personal recommendations. Any information relating to past performance of an investment or any information related to the examples we're going to present doesn't necessarily mean that the price and the market will behave at the exact same way in the future. We are dealing with probabilities and with probable outcomes. So just a few words here for our brokerage here at Admirals. We're in business for 21, 22 years now. We provide thousands and thousands of financial instruments. We do have license from all over the world, from CISEC, FCA, EFSA, on ASIC in Australia, Canada, South Africa, and many other countries. Our spreads are really competitive, and especially for intraday traders. And if you're participating on the live trading webinar, I do every single morning from 8:30. From 9:30, so GMT, 7:30 to 8 a.m. London time, GMT time. And you can see that we trade a lot of the DAX, especially at the London Open, and very, very, very small spread helps massively for intraday trading. Soon you will be able to access our, you can trade actually with us through TradingView and our native platform. For now, we use MetaTrader 4 and MetaTrader 5. As for myself, those who don't know me and see me for first time, although I recognize many names here like Yossi, Raquel, like Peter, Dorbin, hello Argo, Solution Enterprise, hello. For those who don't know me, I'm a trader and investor here at Admirals. I'm an analyst and educator. I hold a master in physics. I prefer swing trading and intraday trading, although now we do a lot of scalping on the DAX during the live trading sessions. And please register if you have the time to come live, and if you want to take the trades with me, you are more than welcome. So what's on for today? As I said earlier, we have the Bollinger Bands. We're going to see what is this very popular indicator. We're going to explain how to implement in all the time frames. And there is some kind of magic, I will say, when it comes to forex market. I'm joking, there is no magic here, but really in the foreign exchange, in the currency market, Bollinger Band works really well, and it's something that indicator traders they love, they use a lot, because it's like it structures the market. Okay, so we will see that in a detail. I'm going to go through this PowerPoint presentation, and then we're going to go to the charts, and we will find some examples of how can we implement, or even we can scan the markets. All right, then we can find some maybe opportunities. Why not? I'm sure that everyone as traders, we want also to implement. It's not to accumulate the knowledge, right? And what I'm going to explain you here on this webinar, if you don't know how to put them in practice and how to press the trigger when you see this signal, then it's just an information. It doesn't mean anything until the point it's you execute it. So just very briefly, Bollinger Bands, they've been developed by a brilliant trader, I will say, John Bollinger, in the 1980s. They are using from millions and millions of traders. Bollinger Bands are a technical analysis tools, and they use to measure the volatility. So the bands, as we're going to see, they expand and contract based on the market movement. Now, the market move, it's based on price action, but during high volatility times, the bands, they don't follow the price, and the price produces the bands. So we see that the price breaks aggressively outside of the bands, and there are some ways to understand which one is the real breakout and which one is the false breakout based on the band structure. And I will show you that at the end of this webinar. So please make sure you stay tuned until the end. So let's have a look a little bit at the construction of the Bollinger Bands. Let's see. I prefer to use, I think, this color. Yes. So constructions of the Bollinger Band. For those who know, of those who see it for first time, Bollinger Bands are composed of 3 lines. So the first line is the upper line. The second line is the lower line. And the third line is this one in the middle. So we call the top line as the upper band, the bottom line as the lower band, and the third line as the 20 moving average. By default, it's the 20 moving average. The deviation of the bands, we keep it on the MetaTrader platform or the trading view. We keep the default. I think it's a deviation of 2. And I'm not going to go into the details unless you want to know how they are built in terms of software. So you can maybe research on the internet. I'm not expert on that area, so I can give you only the information of what you see in front of you while you are using them. So the moving average line is usually set to 20 periods and is used to track the average price over a given period. So we have the moving average. It's a 20-period moving average. As you already know, if you trade for a while, for those who trade for a while, you know that price, when it comes to a moving average, it just bounces and reverses, or it breaks through. But within a trend, usually we have the moving average act as a dynamic resistance or support, depends on the direction. Yep. Then the upper and the lower bands are set of 2 standard deviations, as I already mentioned, away from the moving average line. So 2 standard deviation away from this line. This means that as volatility increases, the distance between the bands widens. This is very important for the Bollinger Bands itself. Please note it down. As the volatility increases, the distance between the bands widen, and as the volatility decreases, the bands move closer to each other. They contract it. I will show you some examples, but we are lucky enough to have this. Look at this area here. The price is just drifting sideways, and the bands, they come closer to each other. I'll change the color. Compare to this distance between the bands as the price move far away from the mean, from the moving average. The bands have the tendency to expand. So it means that we have an increase of the volatility. Doesn't matter, regardless of the direction, okay? It doesn't make any difference if it's an uptrend or a downtrend. It's just based on volatility. So keep this in mind, please. Price gets away from the moving average, the bands expand. In periods of consolidation, the bands contracted. Some of the interpretation of the Bollinger Band. So Bollinger Bands can be used to identify price movements in relation to the bands. Guys, do you all understand what we are saying here? Please let me know if you have questions. Please use the webinar chat area to write down the questions, and I will answer them immediately. And really, if anyone trades using Bollinger Bands, please let me know. Or if anyone traded in the past, again, please let me know. That will be great. So I repeat, Bollinger Bands can be used to identify price movements in relation to the bands. We do have the overbought and the oversold condition. Now, if the price touches the upper band, it's considered as an overbought, like here. The price touches the upper band and it considers as an overbought area. If it touches, although the lower band, it considered oversold. This one here, this one here, this one here. You see, guys, the price in under normal market conditions, excuse me, without sudden volatility coming in, so the bands can follow through with the price. The price has this tendency to touches the band and moves away from the band, touches the band and moves away, touches and moves away, touches and moves away. Here the same, here the same, touches and moves away. But in this case, we see that the price, the market's volatility increases so much that the bands are just not respected by the price, and the price just explode to the upside. They can be used also to measure the volatility. So if you see this candle, we can definitely say that the volatility is increased at this point, right? Solution, yes, I trade using Bollinger Band. Awesome. Do you have a time frame you are trading? You can let me know in which time frame you use them. When the bands are widening, like here, comparing to here, it indicates an increase in volatility. And when they are narrowing, like we said before, it indicates a decrease in volatility. 4 hour, 1 hour time frame, awesome. As I said earlier, it's a strategy itself. It's a really, really brilliant tool to use it. It's one of the, in my opinion, and in my backtest, it's one of the best indicators to use in when trading forex. So, what are the 3 trading strategies with the Bollinger Bands? First, we have the breakout. Okay, it's a very good filter for breakout, to test the validity of the breakout. They can be used as reversals and a trend following system. Now, let's talk about the breakout. This strategy involves buying if we are going long or selling if we are going short when the price breaks above or below the upper or lower band respectively. So the price like this one here breaks above the upper band, and that's a breakout, indicates buying positions. When the price breaks below the lower band, indicates that we can sell. Now, based on my experience in trading, there are lots of false breakout signals using the bands. And I'm sure many of you, if Solution Enterprise, when you use them, you identified the same thing. Please share it with me here. Like this example here, guys, the price breaks above, but it's a false breakout because it doesn't follow through by the next candle, and it comes right into the bands. In this occasion, price breaks above, and it stays above for some periods until it retraces. Same with a short breakout. The price breaks below the lower band. It stays below. It closes outside. This one here didn't really close outside the bands, but the important thing is we don't have a reversal. This one here, that's an inverse hammer, definitely a reversal. If we don't see the continuation, then a hammer here, false break this support, close within the band. So it signals the end of this expansion. How do traders trade this? I don't do it because of the many false signals. They immediately buy once the price breaks outside of the band. So price breaks outside to the downside, they buy, they use a sell order, they put a stop loss somewhere above this bearish candle. Then every second, write this down if you want to trade this, every second candle closes below, outside of the bands, they move the stop loss from here to the next candle. Then wait for the second one, it closes below, so they move the stop loss from here to a new stop loss area there. Closes below, they move the stop loss there. Closes below, they move the stop loss there. Closes inside, and they just scratch the trade. Okay, so pretty much you make this distance. Yes, I experienced such as well, false breakout, but I tend to use multiple indicator like RSI to complement and get more accurate analysis. That's brilliant. Using a momentum indicator along with the Bollinger Bands breakout help us validate the if the breakout is a real breakout or false. Again, we don't have that crystal ball that says, okay, this is a valid breakout, this is not. We have a high probability of an event happening over another. So that's a breakout strategy. Traders, they buy on the break outside of the band. They have their stop loss below the candle. If the price on the second period does not follow through the breakout and it closes within the band, traders, they get out of the trades. However, what we don't want to see, it's this bearish engulfing to just take all the 100% of the stop loss. But if it just shows some signal here, somewhere in this area, let me delete the drawing, somewhere here, let's say price close below, it's a good enough reason for us to scratch the trade. Raquel, you tried it, but you left it due to lack of knowledge. Okay, today you're going to find out everything you need to know about this indicator, and then you can use a demo account maybe to try it and see if that resonates with your trading style, with your trading personality. Then you can use it. Next, the reversal strategy. That involves buying or selling, buying when the price touches the lower band, buying, and selling when the price touches the upper band, like in this example. And this is best used when the market is ranging at some extent. Okay, when the market is trending, it's not that great tool to use, okay, to always enter against the trend. Like this one here, market consolidates, touches the band, we buy, and we get out. We get out when the price touches the 20-period moving average. Here again, price touches the band, we buy, and we get out at this area here. So, and we repeat the same thing. Price touches the upper band, we sell, and we get out when price touches the 20 moving average. Here, it's a breakout. We can, price touches here, we can sell it, but it follows through. So it means our stop loss maybe be hit. But if not, if the stop loss is there and you wait for the price to touch the 20-period moving average that never touched in this example, you just go with this consolidation, maybe uptrend. I don't know what's on there, but from the price looks like that it continues to the upside. Anyway, we are not here to do analysis of this trend, but we are here to explain what's the usage and how trading strategies can be implemented with the trading with the Bollinger Bands. So, and then we do have the trending following strategy, and that's when the price touches the 20 moving average, the 20-period moving average. If we are in a trend, we just execute with a trend. We buy here, we buy there, we buy here, we buy here if that was a touch. And when we are in a downtrend, we can just sell, 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 and keep going. Now, a great way that I use the Bollinger Bands quite intense, it was with a combination, within a combination with a price action. Okay, so before I go to the charts and show you some example, let's allow me to go back to do some recap for the Bollinger Bands. Okay, because guys, I could put another 10 slides here, but you know me, I don't like to use too many slides. I think you noticed it from the previous webinars. Okay, just 4 or 5 slides, more than enough. I would like to go to the charts and find the actual real examples and analyze this. But remember, they measure volatility. That's very, very important because it can save you from many false breakouts, and you can mainly trade the trend with the Bollinger Bands. Or if you identified some ranging market, you can sell the top, you can buy the bottom. Much better if you find price action signals like this one here. So we have a double top. We have this double top. Price came with this dragonfly candlestick pattern and reverses to the downside, could be exited here at the 20 period moving average. Remember, lower band, upper band, 20 period average. When price touches the upper band, it's considered as overbought. And if you combine it with some RSI, some stochastic, MACD, MACD, and you find some divergence, obviously some price patterns like double top or double bottom, then you have a combination of price and indicator, and that increases the odds of the price to move in the direction you predict. Then with the breakouts, unfortunately in Forex, there are many false signals comes with this, but absolutely when we see some contraction here, like this one, this area here, you can see the price is just moving sideways, then a sudden expansion and we see the bands. And here it's a good example of how you identify a strong breakout. When you have a breakout to the upside, you want to see the lower band moving sharply to the opposite direction. Guys, write this down. That's a key. That's the most important aspect of the Bollinger Bands. When you see when you see a breakout like this one here, you want to see this lower band to turn sharply to the opposite direction. This one here, why is not considered as a strong breakout? Because on the breakout, the opposite band, that's the upper band, didn't turn sharply into the opposite direction. It just stays pretty much at the same area. Okay, that was flat. That's, let's say, 10, 15 degrees away from the standard, from the straight line. So that's not a very lucrative trading opportunity. And you can see it on the price, because this candle here, it's almost pretty much closes on the band. It didn't close below the band, outside of the band, like this one here, closes outside, 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 outside. So that shows the validity of the breakout. All right, so that's a very key detail on the bands. Please let me know if someone have questions about that. Okay, if not, I would like to use some charts. So do you guys have any currency pair you prefer to use, or by default I will just take the most rare currency pair, the Euro USD, right? Okay, let's take the Euro USD. Let me delete the indicators. So how do we insert the Bollinger Bands? We click insert, indicators. They are trend following indicators, so you're going to find them on the trend area. Up, wrong button. Trend Bollinger Bands. Let's keep it So you can see the period is on the 20, the deviation is 2, applied to close, that's okay. And you can choose the color you want. I'll put this color. So maybe it's not going to be very visible to everyone. Let's make it a bit. Okay, so here is the Bollinger Bands. Let's go to the 4-hour chart so we can see more signals. Now, let's take, for example, this breakout. So we have this breakout here. I hope everyone can see it. The price closes outside of the band to the upside. If we come on this direction, the opposite direction, so we are here and we see that the band turned to the downside. It didn't stay in the same straight line. It turned downwards. Okay. So if you have bought here, then when the price closes here, you could move your stop to break even. When the price closes there, you could move your stop, let's say here. When the price closes there, you move your stop there. The price closes here, you are out of the trade. So we make this distance here. All right. It's more than 1-to-1. So that considered as a good trade. Yeah. If we take, for example, I will definitely not advise you because I'm not allowed to advise, but I will definitely mention that is best used if you want to trade from the one side to the other side instead of blindly buy at the bottom and sell at the top. Okay, you wait for a price action signal. They are super, super useful. And especially if you find a nice reversal price action, you have high probability to make good trades, especially if the signal is very small in length, like this one here. Maybe it's 20 pips. Let's say it closes there. You have a stop loss 22 pips. Yeah, it's exactly 21 pips. Let's say you have a stop loss at 22, 23 pips, and you have a profit target around 57. So it's more than 2-to-1. And yeah, that's a good way to use the Bollinger Bands. Now, another example is this one here. We have this reversal, this doji reversal with long upper tail, but it's already retraced, and within the same period, it came back to this 20 period moving average. What can we do if we trade solely from the upper and the bottom bands, and we don't take in consideration the trend, we don't take in consideration nothing else, market structure and all this stuff? Then definitely we do nothing if we just trade this methodology. We want to see a small price reversal at the top or at the bottom, so we can take the opposite side and make profit by the time the price comes and touches the 20 period moving average. If we trade them with the trends, for trend traders, we have this higher high, the market make this, we have a price action reversal at the 20 period, then we can buy, stop here, and we make our 2-to-1, 3-to-1, how much you risk. Or this one here, price action reversal, there is a support. So buy, stop loss, boom, by the time the price comes here, we have a good trade. Then let's say double top, this one, boom, another good one. Price action reversal, buy, stop loss here, still in a trade, makes a good bullish engulfing with a nice strong breakout. We can see this band, it's very bended to the opposite direction and it followed through quite nicely. They work really, really well when you combine them with price action reversals. But I wouldn't like to blindly sell and buy from the middle of the band unless there is a strong defined trending market. And of course, there is also room for the price to move to the predominant direction. Now, for example, at this point here, the price it's right within the middle of the band. We don't have any defined direction here. It's ranging. So what do we do here? Absolutely nothing. There is no point to initiate any trade, right? Guys, I do understand that I'm the only one who talks here, okay? But please let me know, does this make sense to you? Do you understand how can you try and use the Bollinger Bands, especially for those who don't use them or for those who use them? Do you understand maybe you can twist your approach a little bit to get the max out of the strategy? Please let me know. For example, I would like to show you something else with the bands. Yes, and can compare. That's very good point, Dorbing, and thanks for mentioning that. Yes, and can you compare Bollinger Bands with Keltner channel? Now, Keltner channel use best in stocks because they don't made to they are not made to capture this volatility like we have in the forex, and that's the major difference with the Keltner channel. All right, so when you trade stocks, it's when I do scanning for stocks, I always use, if I'm going to use if I have to pick up between Bollinger and the Keltner, I use the Keltner. Okay, something else, guys, pay attention to this. To understand weakness through Bollinger Bands, you can understand weakness of the price of the market. When you have the price move in an uptrend, but you see the band make this curve, and from now on, you're going to pay attention to that, I'm sure. You see the price, the band, it's getting away from the price in this shape. Most of the times it follows by retracement, reversal. So if you see a nice resistance and price action, then definitely you can take the trade because they indicate some reversal. Okay, let's have a look at another example. Before I see then oh, you can see this. I thought I couldn't see it, but anyway, so let's bring in the middle. This one here, you see the price, it's coming back within the bands, and then it's trying to make a higher high, but you see the band, it creates this curve here. Double top, rejection, can initiate short trade, boom, there you go. This one here, look at this. Price retraces. Yeah. It comes all the way up. The band make this curve. followed by a reversal, double top, boom, to the downside. That was a good breakout, but again, you will notice that on the breakout, and that's another thing you have to take in consideration when you are trading the bands. You always must understand that on a breakout, the candle, it's gonna be very long, very, very long. That means if you enter short here with a stop loss above here, that's 130 pips on a Euro USD, a pair that, and that's a 4-hour chart. On average, on a daily, under normal market conditions, a daily move of this pair, it's about 80 to 100 pips. But this, it's something extreme, 140. So if you have 140 pips stop loss, to make 2 to 1, you need to have 280 take profit. In this case, it came, yes, but the strategy, if you're going to apply the strategy, you have to follow the strategy. If you enter here because of the nice breakout outside of the lower band, then you have to close the trade when the price closes within the band. In this exception, we saw that, yeah, it continued like this, but most of the times, it really doesn't do that. So we have to be consistent. All right, we keep going. We see a nice trend. Break outside, the price comes here. We talked about that example. Let's go to the Australian dollar against the US dollar. Let's try this. Let's delete everything. We go insert indicators, trends, Bollinger Bands. So we go to the 4-hour charts and we decide that we want to trade Bollinger Bands. We are here. All right. What is the market doing? It's just moving sideways. Does this Bollinger Band strategy can work here? Only if we find a a reversal here, small candle that we can trade short and target the middle of the band, or like this one here, we buy and we target the middle of the band, but at least to have room for 2 to 1. If we talk about, and that's what I prefer to do, guys, during this webinar, to use live market examples. So is this strategy applicable right now? No, it's not, because we don't have the right structure. So we just move on. It's easy to go back and see this, that was what a nice signal and we should have traded this one. But it's different when we are dealing with the market live, okay? And that's what you have to understand when you are doing back testing. Maybe, for example, this candle here, if we bought there and we had our stop loss here, let's say 15 pips, by the time it touches the top band, it's 50 something. So we make more than 3 to 1. If our maximum target is 3 to 1, then that was a good call. Now, if we see this reversal here and we enter here, our stop will be there and it's been hit. Then we find this, maybe this one here it was not a good setup because it was below the moving average. Okay, so maybe this one here was a good setup, like we enter at the close, we have a stop 16, 17 pips, and we have a 36 pip target, or this one here, the price could have 23 pips, 25, let's say. Stop loss, we had 45, 1.5 to 1 by the time it touches the middle band. So that's how you can work around with the Bollinger Bands. Okay, I will definitely say that they are very powerful, especially in the forex market. It's something adds too much value to the trader, but the most important thing is to be consistent. If you try it for until you have a couple of losing trades and then you say, scratch it, it's not for me, that's not a good reason. But if you try and understand and you apply some consistency with this, like in any other strategy, and I'm sure you can make up your mind if that's the right strategy for you or not. For example, this one here, we have the price rejected the 50 period moving average. We could buy somewhere here, or then this hammer anywhere. We have room until we move to the next resistance, and the market with this candle takes the touches the resistance anyway, or the profit target. How much? This is 25 and it went to 50, 75. Yep. Okay. Just the standard deviation, EOC, the 2 deviation. Let me show you here, properties. That's deviations is 2, period 20, and that's it. Apply to the close, and that's it. Simple. All right. Remember to use them with price action, and it's one of the best tools. Guys, that's all from me today. I hope you had a great session. I hope you find a lot of value. Please make sure you stick around and you are and you join as much as possible the live trading webinars. Again, I hope you find some value. Thank you so much for your participation. I really enjoy doing these webinars for you. And I look forward to see you tomorrow at the live trading. Thank you so much and bye for now.